Mr. TK Kurien, Chief Executive Officer as well as Member of Board at Wipro, as well as Jatin Dalal, CFO at Wipro, is now with us. Mr. Kurien, let me start with you first. In the previous interaction, you told us that H2 will be better than H1. Then can you explain why the guidance for Q3 is looking in muted versus what you have done in H1?
So the reason is pretty simple, Pankaj. It's really two things. One is that, and I talked about it quite a bit in my earlier calls, we have two headwinds hitting us this quarter. First is that we have won quite a few consolidation deals, and we are right now in the process of transitioning them. During the time when we transition, we get no revenue. That's one impact. The second is the impact of furloughs. This is a little difficult to kind of really understand how much you should really provide for this. Because we typically do a poll of all our customers in the month of October, and we go out there and figure out how much furloughs that they would have, and based upon that we are able to get a fair idea of what our revenue hit for the quarter would look like. As we transition our business into more on the business side of the activities, we are seeing project-based business coming in, and project-based business, typically what happens is we work directly with business owners. For that segment of the business, it's a little uncertain for us to figure out how to manage furloughs. And that is what we've actually built into our guidance. We'll wait to see how the quarter progresses. And towards the end of October or beginning of November, we'd have a better idea of how this is going to pan out. Right now, the guidance basically reflects what we see at this point of time.
Mr. Kurien, do you think H2 overall will be weaker, or we can expect a little bit of bounce back coming in Q4?
So that is our endeavor, and absolutely that's what we are planning to do. But then, again, I don't give full year guidance, nor do I only give quarterly guidance. So take the guidance for quarter 3 for what it is. When it comes to quarter 4, let's see how quarter 3 pans out, and then let's look at quarter 4.
Jatin, can you comment on the guidance bit? What does it factor in, volume decline or a pricing decline?
Yeah, so as you know, our business is very quickly emerging to be a single axis business in terms of what is the value that you deliver to customer, and we are breaking less and less on volume and pricing, especially if you are driving a large scale productivity in the organization. So right now, the way we see it is we see certainly volume growth in certain segments of the business. In other sector of the business, we will have a balance of both pricing as well as volume.
Mr. Kurien, let me come to you on the top client matrix. We saw a contraction over there. This was the 4th or the 5th straight quarter where we've seen a decline over there. Any particular reason?
I think it's a combination of factors at the end of the day if you really look at what's happening in our top client. Number one is the overall spend is coming down, and that's one of the major reasons. And the second big reason, I think, is the fact that if you look at some of the businesses that we are in, we basically still believe that on the value side of the business, when we transition into the value side of the business, out of the commoditized businesses that we have, we will go through a period of transition. And those are two factors that are really playing itself out. Nothing that I need to be concerned too much about the fact that, there is big loss of business or somebody else is gaining share. That's not the case there.
Right. Mr. Kurien, also in the press conference, you said that the number of $100 million deals have come down. None of the other players whom we have spoken to have said something like this. Is it particularly for Wipro that you're seeing that?
So I think that was a little bit of a mistake that we made out there. Really, the impression that we gave was that, it's coming down for us. What we're seeing is this. I think what that point was really intended to convey was that the number of deals, very large deals that we've seen in the past, those are coming down as smaller and smaller deals. I think that was the message that we planned to convey there. So it's for the industry, it's not just for us. We're not seeing the $300 to $500 million deals like the way we saw it about a year ago. We're seeing more the $100 to $200 million deals, and that we're seeing quite a few.
Jatin, can you talk to us about the margins? They declined by about 30 basis points QOQ. Is it mainly factoring in the wage hikes that you have given this quarter?
That's right, Pankaj. So we gave the salary increases on 1st June, and therefore we had 2 months impact to be consumed in quarter 2, which we consumed. And we had certain internal initiatives which were predominantly focused on productivity. So despite 2 months salary increase as well as some of the investment in utilization that we made, we were able to keep our margin in a very narrow range of our quarter 1 performance. And therefore, it was a good quarter, satisfactory performance.
Jatin, that was about the margins in this quarter. What do you expect in H2? Do you expect margins to be maintained at these levels?
So as Pankaj, you know, we have taken the salary impact, which is the planned cost increase for the year already in quarter 1 and quarter 2. So there is no large scale planned expenditure which is there in quarter 3 or quarter 4. And we feel that we have sufficient levers for us to maintain the margin in a stable range.
Mr. Kurien, if we talk about various segments that you operate in, can you tell us what was the performance of energy, healthcare in Q1? Saw a big decline. Has that seen a decent bounce back coming in the quarter 2?
Absolutely. This quarter, healthcare has grown more than 4% sequentially. And on the energy side, we have bottomed out. Last quarter on constant currency was flat, even though on reported it went down a little bit. Going forward, we don't see too much of a drop there. I think we've kind of hit the bottom. Now we should wait for the up to come.
Jatin, can you tell us something about the IMS and application services? Quarter 2 saw a very, very, very subdued growth coming in. Do you expect that overall muted growth in this space to continue?
So as you're aware, infrastructure services has been a growth driver for us. Of course, quarter 2 has been a little muted for infrastructure services, but we do hope that we will be able to get the growth there pretty quickly. Now, application services is a combination of our new age services, business application services, and the classic ADM services where there are mainframe and mid-range range of application support that we provide to our customer for their legacy applications. And as you are aware, there are no new investment in some of these spaces, and effectively the budgets for maintaining those applications or upgrading those applications are only shrinking. So there are two factors there. Business application services continues to do well, and there is a downward pressure coming from application development and maintenance stream, ADM, and therefore what you're seeing externally is an average number, but it is really a play of two separate streams.
Thanks, Jatin and Mr. Kurien, for joining us and explaining what happened at Wipro in quarter 2 as well as what's the guidance for the next quarter.